This is a live recording, April the 29th, around 3:09 p.m. During the Fed is giving out the latest announcement, and look at the market changes along with those decisions. And then we will have quite a few very important earnings tonight after the market. Microsoft, Facebook, Tesla will report earnings. Of course, we also have CME, eBay, ADP, Qcom, GE, Nordstrom, MasterCard. Boeing already reported earnings this morning. But inflation expectations did not. It has good cash flow, but it did not beat the top line as well as the bottom line. But the stock was holding up very well today after the report. Right now it's slightly going down, but right after the report, you can see that's the pre-market, and that's during the day. It's doing very well. So these are all the lifetime price change for all these stocks that I'm watching. This is my watching list, and this is level 2. Wherever I highlight any stocks name, for example, this is Boeing I'm highlighting. This is the level 2 trading amount and trading dollars for Boeing. If I change to Microsoft, then this is the level 2 for Microsoft live trading. And these are the market largest percentage movers from New York Stock Exchange. You can see these are some of the examples. I have 25 in a row for you to see what are the biggest movers. Looks like CAPR has earned 260% today. Let's see what's going on. The market is working. The market is assessing risks. It's pretty big range of increase. Look at this. Really important for everybody, including therapeutic. The most vulnerable among us, because if markets stop working and credit stops flowing, then all right, all eyes on Tesla tonight, Microsoft and Facebook. And I have this page designated for these 3 major stocks: Microsoft, Facebook, and Tesla. Tesla highest high today went to $803 per share. And let's see, right now it's going down. Let's see how it's gonna go after the market. I'm gonna report the earnings after the market. Let's see live. Tesla. This is Microsoft. Microsoft is doing pretty good today.
Hi, Chair Powell. Chris Regaber, AP. Thank you. I guess I had 2 questions.
All the way from $172 to $176. After market, I don't know if it will shoot up or shoot down. Most likely, Microsoft will report positive earnings today. Facebook, I'm not sure. Maybe the ad revenue will go down because of the coronavirus. Tesla is questionable. I will pray it will go up, but because of the factory closing in China for the most part of January and then February, I don't know how much profit it will make. So it's very interesting to see today. So this is the live recording. The background noise is from CNBC. So I'm recording both. So that's it.
The labor market, the risk of damage to people's skills and their careers and their lives is a function of time to some extent. So the longer one is unemployed, the harder it gets, I think, and we've probably all seen this in our lives, harder it is to get back into the workforce and get back to where you were, if you ever do get back to where you were. So, and longer and deeper downturns have left more of a mark generally in that dimension with the labor force. And so that's why, as I mentioned, that's why the urgency in doing what we can to prevent that longer run damage. It doesn't have to be that way. We won't be able to limit all of it, but we do have the tools to do what we can to keep people in touch with the labor force and working, and also out of insolvency too. It doesn't seem fair that people should lose everything they have, including their homes, over this. So nonetheless, there will be some of that, but we do have some tools to ameliorate that. In terms of the the money, the $454 billion, it's a couple things.
This is
First,
Tesla Live
the Treasury
Trading.
Secretary really has
Level
authority
2,
over
Level
that.
3.
Right. And it stands in front
Level
of
1,
our
of course,
bosses.
is on top of here. This is current.
So,
Dow Jones is at 616 points. NASDAQ 325 points. S&P 500 85 points. So it's a pretty good day today.
And that's okay. I think that's
And then
what we're supposed to do.
we're gonna see just a few
very unusual time.
representative stocks doing after the market.
About that money, I think that's really a question for the Treasury Department. We set up the facilities and we work very, very closely and successfully and collaboratively with the Treasury on this, but that particular aspect of it falls more to the Secretary.
Okay, we'll go to Nancy Marshall-Genzer for the last question.
Nancy Marshall-Genzer with Marketplace. Chair Powell, I'm wondering what you would say to savers who are hurt by very low interest rates and maybe going into investments, maybe in the stock market, that aren't so great for them. And also I'm wondering if you can give us any more of a clue as to how long you think we're going to have interest rates near zero.
So we think that low interest rates affect the economy through a number of channels.
Let's take a look at
in a positive
Microsoft
way. Lower
now.
interest rates support economic activity
Microsoft
through
is
channels
doing
that we
so well.
overall through channels that
Wow,
we
look at this.
understand reasonably well. They make it cheaper to borrow.
$42,000.
They drive it
42,000
costs
shares.
Borrowing down. They do
Times
raise asset prices, including the value of your home. If your saver owns a home or has a 401k,
That's
your
$7.4 million. Wow.
But for people who are really
That's why
really
representing
just
this big
relying
red
on
candle,
their bank
damage
savings account, earnings,
$7.4 million.
this is,
Somebody just sold.
you're not going to benefit from low interest rates. But we have to look out for the overall economy. Low interest rates support employment. They support economic activity.
Wow, 45,000, 46,000 again.
Low interest rates are
Times
a good thing.
177.
And
$8.1 million. It may not be a person, maybe from different exchange, the total, but it's pretty big trader here. Wow, 80,000, look at that, 46,000. It's not coming down yet, but their set price is 177. See if we'll hit 177. 177 is around the corner because we went to 176,995. So, oh wow, we hit it. Wow. Amazing.
So that's where we are. We're not changing that.
$8 million. Whoever made that money, they made it.
That means we're going to be very patient.
That's amazing.
We're not going to be in any hurry to move rates up.
Very much.
Look at this. This is the bid side, this is the ask side. The green side, green is the summary of from what exchange and how many share is buying, or this is ask side means somebody is selling. This is the yellow part is the lowest price. Wow.
Characterizes
Look at that.
the hit as severe, certainly on unemployment, on economic growth, on household spending, both in the short and medium term, which is getting a lot of attention. The medium term outlook has the risk.
Everybody is bidding. Microsoft gonna go big today. after hour. See, this candle is very bullish candle. Hopefully we will hit here. The highest 180.
And also calling on fiscal authorities to keep working as well to support
so hit the resistance
line.
line.
Yeah, saying the Fed very much do what it takes. Certainly not an optimistic outlook in any way, shape or form for the economy. We did see a fractional tick up in the long end of the yield curve in terms of yields. 10-year note got up to 0.63, having been at 0.59 earlier in the session. It's somewhere in between that 0.61 at the moment. The dollar did weaken a fraction. It was just lower. It's now down by about 0.3%, as you can see there on the yield curve. A slight steepening of the yield curve today. Either way, we are near the session high, still up 600 points plus on the Dow. The high of the session was 663. 3% gains for the S&P 500, almost 4% for the Nasdaq, Sarah, and the Russell up 5.4%. Certainly continuing a theme of late of those that have underperformed most year to date, bouncing the most sectors. Energy top of the list up 6.7%. Coming up into
I would just say I don't think Powell said anything that was unexpected in terms of the economic forecast. And
okay, the ex-dividend day for Microsoft is May the 20th. 51 cents per share.
Open-ended and said multiple times we're not going to be in any hurry to withdraw the kind of
Let's
stimulus.
see if it will hit 179. Definitely it will hit.
Trying to give people confidence.
Will
Also,
go
I think
so
very
past,
interestingly,
but how
really
much?
tried to message around helping households who need it, and why the Federal Reserve is not just trying to bail out Wall Street over Main Street, which is sort of coming up a little bit in the narrative now as the Fed steps into places it's never been before. For instance, buying riskier corporate debt.
Certainly lots to discuss and lots of people to discuss it with. We will break down all of the headlines from that Fed press conference with former PIMCO Chief Economist Paul McCulley and former Fed Governor Sarah Bloom Raskin, plus a massive afternoon of earnings still coming. Facebook, Microsoft, Tesla, Qualcomm and eBay all reporting after the close, which of course is about 39 minutes away. We'll discuss Facebook's numbers, by the way, with the company's CFO David Wayner in an exclusive interview shortly after the numbers. Of course, earnings have mattered over the course of the last couple of weeks. We've seen quite a lot of after-hours moves when numbers have hit. Joining us, though, to react to that Fed conference and the rally we're seeing today, CNBC senior markets commentator Mike Santoni, Michelle Mayer, head of U.S. economics at...
This is ISI 50 is the middle line, so I will see. It shows the strength of Microsoft now. Anything above 50 line and then stay above is showing the strength. The strength of it doesn't matter. I have 80 and 20 line here. Over 80 is overbought. Any stocks showing strength, it can stay in overbought zone for a while. So let's see how it goes. The bullish cross from MACD, as well as the momentum, is of course over the roof. The volume though, volume is not that high. Look at that. The volume is very low. Alright, so I don't know if it's a short squeeze or not. The volume is not good. I'm not getting in here. I'm not getting in here. Interesting to watch. Let's see
in terms of
if there's
risk,
any news here.
So, you know, we operate under the laws that Congress passes. And there are a number of aspects of under Section 13.3, and you can see that they've permitted us to, I think, move very quickly and move into areas where we've never been before and do so quite aggressively. So I think
Microsoft earnings preview. All right.
And providing help in places where we never have.
That's the preview if you want to read. It's guided to $34.1 to $34.9 billion.
So he also said earlier, hey, if with this Main Street lending facility, which he suggested is coming relatively soon, if you can't repay that loan, maybe that's not the program for you.
So
I thought there was a little bit of a challenge there in the Treasury Secretary about the amount of risk that maybe needs to be taken to really fund this economy.
It's an interesting take, Steve. However, the Federal Reserve is doing a lot, and a lot of I think there are
Microsoft tends to be very consistent in terms of beating consensus. Of course, it is.
Swap lines, they're certainly doing a lot. I think there's a broader conversation, though, to be had about what all this liquidity does when the economy, yes, we need liquidity right now.
Earnings per share is $1.27 per share. Revenue supposed to be 33.7 billion. That's the consensus. Let's see if we'll beat it. Okay, I write it down. $1.27. 33.7 billion.
Yeah, I agree with you completely, and I think it's an interesting metaphor, the liquidity one, because
That's
it's
for
liquidity for
Microsoft.
people who can't drink. It's
Facebook.
liquidity for
Let's see
people who
Facebook.
can't necessarily borrow. These are the places that are
Facebook.
the big holes in the
Period.
recovery effort right now. And I
Facebook
think
don't
Powell
have it.
understands that. He was very
Earnings.
clear today about the limitations of the Fed, and I think we're going to this additional money.
Facebook target raised to $190 from $180. No wonder it has a little break today, upside.
About the amount of risk that needs to be taken with this money from Congress. Should they go further down the risk spectrum to provide more money?
No earnings preview for Facebook here. Let's see Tesla.
Let's bring in some more of the panel.
Tesla reports earnings today.
Tony, first to you, just for what's happening in the markets today. I guess not totally impacted by the Fed press conference, but we're continuing to see a strong bounce and
shares are up 3.2% today.
Energy or banks both performing strongly today.
Stock has been 5% each day in April. Increase, that's a lot relative to other stocks. And the shares are up more than 80% year to date. Wow, 80%. Crushing comparable drops of other automotive stocks, as well as S&P 500 and Dow Jones, of course. Let's see. Because it's Tesla. Alright, let's see. He expects 900 million burn in the first quarter, due in part because the production was shuttered in March, of course. 900 billion burn. So if we see 800 billion, then it's a beat. All right. Cautions on shares. Rating then equivalent holding has a 580 price target. My goodness. Now it's already 800. How much drop we have to do? Let's see. 800 minus 580. $220 from 800. That's 27.5% drop. That is brutal. Okay, overall analysts expect Tesla to lose 28 cents per share in the first quarter. All right, let me write it down. Lose minus 26 cents per share.
And I think that primarily speaks to their commitment to the zero lower bound. It speaks to their commitment to
Tesla is not in the S&P 500 yet. That's true.
They'll do more. They want to keep the credit flowing through the financial system.
If they continuously turn the corner and going up continuously, then they will be entering S&P 500 for sure at the end of this year, 2020. But it all depends. All right. Wow, another sell target at $300 per share. The other one is 580. My goodness, 580 is 27.5% down from now. And 300 target is, right now is 798 minus 300. Divided by 798. Wow. 62.4% down. Ladies and gentlemen, get out of there. My goodness, that's not too good. Tesla wants to deliver 500,000 vehicles in 2020, but a small cut won't shake the confidence of bullish investors. About 400,000 likely. Okay. Wow, target price is not good either, this one. Then is a 425. $425 per share from 798. 373. We have to go down. That's 46.74%. Wow, it's ranging from 27.5% to 62.4%. The price is gonna go down. Everybody's saying, experts are saying, Tesla's price is too high. Started out here delivering about 88,000 cars. Looking into second quarter, estimated to deliver ranging from 70,000 to 90,000 units. All right, so all depends on how many cars they can deliver. All right. They need to do more, and they don't need to worry about the debt. My goodness, we're sitting on the cliff. 100%. We better get out of there. This is $803. Today was the highest. Yesterday, I believe, if I memorized, serves me right, is $806 yesterday. Yeah, $805. That was yesterday. Today was $803 highest. The day before yesterday, in the aftermarket, we went all the way to 806. See, this day. To prepare for the next downturn, it would be good to get the fiscal house in order. But that time is not now. The time now is to spend. Work with me.
When we consider the fact that the S&P 500 is down 8 or 9% year to date, the 10-year Treasury
doesn't want to work with me, but that's okay. I remembered. $806. 2 days before, that was Monday. Monday around 4:06 p.m. Today, this is the highest price. And I give some resistance lines there and see how they're going to perform today. All right, that's interesting. The consensus is not too good for Tesla, but for Microsoft, sounds very, very promising. 33 million total shares traded already. For Facebook, 30 million, almost 31 million already traded. Tesla is only 11 million. Only, I'm saying only, but this is a lot. Boeing is 56 million shares traded. I'm surprised. Boeing holding so well today. All right, it came down. All right, it should come down because the earnings wasn't too good. They just have lots of free cash holding in hand. Free cash is important in this market because they can do a lot of things. But they are holding. Boeing is no longer paying dividend. They are holding their dividend. No more dividends at this point of time. But that's okay. They need a cash to grow their business, to stay alive. So as Tesla, so as Facebook, they don't have any dividends anyways. Microsoft has dividends. So as Gilead, Microsoft.
The economic data, and there appears to be a mismatch.
Gilead was doing good pre-market today. Yesterday pre-market, it was the best. Is that yesterday or today? Today. This pre-market. Today's pre-market. April the 29th, because Remdesivir, they did a small human trial to shorten the hospital stay to 11 days. They can recover, and then they can have short-term treatment effectiveness. But they did not have, Gilead did not have those placebo group. That's the only thing. They should have the placebo group to make it more legit. But it's already very effective, very promising results from Remdesivir, from Gilead. That's the only company so far has the positive treatment results. See, the highest high was in the pre-market around This candle was 9:05 a.m., $87.66. Since then, it went down because Gilead always very volatile. People don't like much of Gilead or don't have much confidence or something. Although the result was fantastic, people still selling because it's a reverse psychology. If you see a stock shooting up that much high, they always have tendency of cover the gap. It's called a gap cover. So that's why it's coming down a little bit, but still we're at $84 right now. We can still go higher, but I wanted to go to 88, but it's only my wishes. Gilead will report the earnings on Thursday, which is tomorrow after the market. Is it after the market or before the market? Doesn't matter, I'll find out. Yes, tomorrow it will report earnings. All right, right now it's about 3:35. We continue watch this list and wait for the 4 o'clock and then wait for the excitements to start.
Don't go anywhere. We're following this rally for you into the close.
CNBC Sector Sold is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at sectorspiders.com.
Guys, if you wake up feeling fat, bad back, heartburn, tired, then it's time to get healthy and lose weight with Nutrisystem for Men.
I'm healthier, I'm stronger.
Lose up to 13 pounds and 7 inches overall in your first month. Money back guarantee. Order now and we'll deliver Nutrisystem for Men.
Not only did I lose 60 pounds, I don't snore.
Save 50% on a month of meals delivered to your door.
Go online or call 888-916-56 to save 50% plus get probiotic shakes free.
First up is this exquisite bowl of French onion dip. I'm going to start the bidding at $5. Thank you, sir. Looking for $6. $6 over there. Do I hear $7? $7 in the front. $7 going once, going twice. Sold to the onion lover in the front row. Next up is lot number 17, a spinach and artichoke dip, beautifully set in a hollowed out loaf of sourdough bread.
Don't get mad, get E-Trade, and get more than just trading. Investing, banking, guidance.
Together, we can do this. Our spirit is what unites us. It is what bonds us and reminds us we are all one. Which is why if you need a vehicle during this time, we are offering 0% financing for 84 months with no payments for 90 days. And the ability to shop and buy from the safety of your home. Better days are ahead. And Chrysler, Dodge, Jeep, and Ram will help you drive forward.
I just want to make sure that I set all those after hour, extended hour. Yes, it will show. That's good. This one. Extended hours, yes, it will show. This one, I just double check. Yes, it will show. Gilead. Yes. Okay, good.
Welcome back. We've got just 22 minutes after the session. We're not far from the highs. We're up 620 points on the Dow. The high was about 660, 3.1% higher on the S&P 500, nearly 4% higher on the Nasdaq. Russell leads the charge, up 5.3% today, up 11% for the week as a whole. Energy, top performing sector, utilities just in the red, the sector in the red. Some individual movers for you. Shares of GE slumping today. The company reporting a revenue decline of 8%, adding that it expects this to be worse because of the coronavirus pandemic. It's down 2.6% today. Lyft laying off about 1,000 employees. That's 17% of its workforce, and furloughing an additional 288 others. The ride-hailing company also reducing base salary for employees exempt from the layoffs and furloughs for a 12-week period. Liv says this comes as it makes an effort to reduce operating expenses and adjust cash flows amid the COVID-19 outbreak. The share is up 3.7% today. Sarah.
The Federal Reserve leaving interest rates unchanged at zero, saying they will remain there until there's confidence that the economy is back on track. Joining us now is CNBC contributor Sarah Bloom-Raskin, former Fed governor, and Paul McCulley, former PIMCO chief economist. Good afternoon to both of you. Sarah, what was your takeaway from Fed Chair Powell's pretty tricky, I would say, communication that he had to give around what is an unprecedented drop in economic activity that we're looking at?
This is W sign.
Right. So, Sarah,
nice.
the barn door at the Fed is wide open and
so it will reach to
everything is out. The horses are running
hopefully.
faster and faster. Really, all the tools and some more to come have been deployed. And essentially what Chairman Powell is saying is that he is going to do whatever it takes to actually get this economy moving again. Now, of course, we know that the work the tools that he has are really tools that work through financial markets, that he can't do anything about getting a vaccine. He can't do anything about the flat economic activity that we're seeing, the number of unemployment claims. All of that is much cause for concern. That said, you see him doing really quite a bit. He's got us at the zero lower bound. He has expanded quantitative easing in a way that, of course, has no time limit. It has no duration. It has essentially an open-ended quality to it. And then, of course, we've got these major Fed liquidity facilities. They are all out and they are standing up now, and they are essentially, the faucets are turned on high. So essentially, you see quite a bit here. More to come, I think, in terms of the Main Street lending program. We'll also probably see more in terms of the municipal bond facility. But you can see him moving all of these different parts and doing things really to an extent that is fairly extraordinary and, of course, unprecedented.
Paul, clearly the Fed chair said he's willing to deliver more if necessary. But what portion of his available levers has he already pulled? Are we talking 90% or 50%? Is there much ammunition left?
I think he's pulled pretty much everything.
See,
that he
the
can.
W sign always work.
I would certainly agree with Sarah that he's willing to do it with all the vigor he possibly can display. The important thing that he brought out, though, and I think it's really important to pound the table about this, is that there are limits to the Fed's power. The Fed is not a fiscal authority. The Fed's in the lending business, and they can lend against anything that they deem to be good collateral. They can be incredibly liberal in that definition, but they're not in the grant-making business. And to the extent this economy needs to have grants from the government to households, to business, to state and locals, that has to come through Congress. And I think Sarah noted when he talked about the great fiscal power of the United States, and he was openly calling on the fiscal authority to give him some equity in order to be able to take more risk. So I think he did a really good job of saying, A, we're doing everything we possibly can, but B, there are limits to what we can do, and Congress should use its great fiscal power, that this great Bank of Uncle Sam that's been created, which is a joint venture between the Fed and the Treasury, needs to have more taxpayer dollars for grants and loss absorption.
You know, Sarah Bloom-Raskin, this is an issue I know that you're sensitive about because you were at the Fed during the last crisis where, there were questions about who got bailed out and who got relief and what QE did and who it helped and who it didn't. Already, we're in an environment where we're sort of wondering if there's a Main Street versus Wall Street thing.
I was drawing a line
the big
earlier.
Companies that the Fed
Maybe
is
I did
lending
not
to, and the markets that the Fed has propped up is disproportionately helping the haves instead of the have-nots. I think Powell was careful to sort of explain
Microsoft
today why his policies, for instance, to help the credit market help cushion the economic shock that would hurt people at the very bottom.
The dotted line is previous
close
line.
When it comes to the unprecedented size of this package and just who it's aimed at?
I think you're right, Sarah, and thank you for remembering history here in terms of what was done during the financial crisis, which many people will remember did cause quite a bit of political backlash. Now, I'm not feeling essentially the full political backlash at this moment, but you do see signs that it's starting to build, and it's precisely for the reasons that you're pointing out. The Fed is engaged in massive amounts of relief here, and there's different speeds at which this relief is coming out. I think the relief coming from the Fed is on one speed, but there's other relief coming through the Treasury, the Small Business Administration, other agencies of the executive branch, and that relief is hitting all kinds of speed bumps and friction points. And that's an issue because the speed with which this relief hits, I think, is going to affect the contours of what our economic recovery looks like when this pandemic is over. So there are definitely differential speeds here coming out in terms of you think of the water, right? The water in the faucet. I mean, some of the pipes are clogged and some of the pipes are moving pretty smoothly and moving the relief to where it needs to be. But ultimately, the bigger point here is that the Fed can only do so much. Yes, it is an extraordinarily powerful mechanism, and yet it works through financial markets. Ultimately, it is not a good mechanism for actually targeting particular small businesses, particular households. So the ability of the Fed mechanisms to actually reach the real economy is still something that we're going to have to see. And to the extent we don't see it, or that it's late in coming, I can guarantee you that there will be political backlash here. The other thing to keep in mind, of course, is capital markets, right? This has been a failure, really, of capital markets, not just financial firms. And so you wonder, too, at the end of all of this, whether the backlash is going to take the form of some kind of regulatory response. Because, of course, the Fed is now working in markets that it does not directly regulate. It is buying bonds, propping up different parts of the market where it does not have explicit oversight. And so we'll have to see whether there's a call for some kind of regulatory oversight when this is all over.
Sarah and Paul, thank you both so much for joining us. Great discussion there. We have, by the way, just 13 minutes left of the session. We are up 3.1% on the S&P 500. When we come back, we'll have uninterrupted coverage of the final minutes of trade.
Market Movers is sponsored by Payden and Regal, offering global investment solutions.
Every financial plan needs a CFP professional. Confident financial plans, calming financial plans, complete financial plans. They're all possible with a CFP professional. Find yours at letsmakeaplan.org.
Pandemic Impact, Cutting-Edge Solutions, May 12th. Crucial insight from the industry's top minds as CNBC's Healthy Return Summit goes virtual. Sign up for this complimentary event at cnbcevents.com/healthyreturns.
I had my dream career.
In 2014, the PLFA Foundation was established to advocate for the advancement of education and entrepreneurship around the world. Through the PLFA Foundation, support and grants are provided to organizations in the areas of science, education, music, and the arts. These grants are designed to advance people's understanding of the arts and sciences. The PLFA also supports innovative technologies and entrepreneurship to people in the U.S. and around the world. Go to plfa.info for more information.
So you decided to go to college. That's cool. So pop quiz. Which is a better way to earn your degree?
Commute to college and fill your gas tank, get stuck in traffic, drive in bad weather, try to find a parking space, walk a half-mile to class, or learn online at Independence University. You don't go to college, college goes to you. That's Independence. That's Independence University. And all your supplies, including a brand new laptop and tablet, are included with tuition. Education online for a better life offline.
Call 800-336-9085.
Local Now is here for you.
Hi, New York.
Hey, LA.
Chicago.
To get you through life's new normal.
Hey, America.
Trust me, you're gonna love this. Come on.
2 tablespoons of sugar.
Kind of your average.
This is the place to be. Something for everyone. Local Now. Download for free in your favorite app store.
You should be mad at leaf blowers. You should be mad your neighbor always wants to hang out. And you should be mad your smart fridge is unnecessarily complicated. But you're not mad because you have E-Trade, which isn't complicated. Their tools make trading quicker and simpler so you can take on the markets with confidence. Don't get mad. Get E-Trade and start trading commission-free today.
The Market Zone is sponsored by E-Trade, now with commission-free trading.
With over 10 minutes left in the trading day, we are now in the closing bell market zone. Commercial-free coverage of all the action going into the close. CNBC senior markets commentator Mike Santoli here as always to break down these crucial moments of the trading day, along with Josh Brown today. Let's kick things off with the market. We rallied at the open, have added to those gains all day. The Federal Reserve this afternoon leaving interest rates unchanged at 0. Chairman Jerome Powell weighing in earlier on the Fed's plan of action from here.
We're committed to using our full range of tools to support the economy in this challenging time. We're going to use them, as I mentioned, forcefully, proactively, and aggressively until we're confident that we're solidly on the road to recovery. And also to assure that that recovery, when it comes, will be as robust as possible. As long as needed, we'll use them.
Strong rally today, up 3% on the S&P. Josh, to me, today is a day that encapsulates why the market has been so strong, and we've seen this now more than 30% bounce over the last month. We got the hopeful signs from Gilead's remdesivir with an added plus from Dr. Anthony Fauci, who sounded very optimistic about them. And you've got the Federal Reserve, who is already all in. And today you heard from Fed Chair Powell that they're going to be all in for as long as needed. And those two powerful forces have really been hopeful signs for this market. What do you make of the action we're seeing today?
It sounds like our work is all done here. Everything will work out happily ever after, right? I think that
happily ever after.
For a lot of people who look at markets technically or look at the internals, is what's happening with small caps is absolutely breathtaking. We're in the midst of a historic move in small caps. Today, if they go out where they are now, would be 6 straight days for the Russell 2000 of more than 1% gain each day, which is incredibly rare. Small caps are now 40% off of the lows, a huge comeback. And remember, they were hit harder than the S&P in March. And if you actually look at small caps relative to the triple Qs, which my colleague Michael Batnick did yesterday, they just had a 2-day outperformance event that you have to go all the way back to March of 2001 to find anything even close. So this is important for a couple of reasons, Sarah. Number one, I think you have to think about regional banks when you think about the Russell. There's an almost 1-to-1 correlation, Russell value versus the KRE, the Regional Bank Index ETF. That is precisely the area of the market that we want to see enthusiasm for. And I think funneling another $300 billion worth of small business loans, many of which will go through regional and smaller banks this time, is probably helping those stocks. But that is what you want to see. If we're really going to have a recovery and it's going to get underway soon, it's going to happen with banks being able to make loans, people being able to borrow. So I'm happy to report that. I think it's not getting enough attention on the air today, and I really think people should think about this idea that smaller companies are now a big part of the rally. It's not just the 5 names we talk about all the time.
Even if those laggards are playing catch-up over the last couple of sessions, worth pointing out that Alphabet, Facebook, Microsoft all up 4% or more today, and that's all around earnings, 2 of which are coming at at the close today. But first, let's touch on that other positive stimulus point for the market today. Gilead shares rallying on new hopes for its potential coronavirus treatment. And Meg Terrell has all the details we need to know about that. Meg.
Hey, well, we got the NIH's clinical trial results on Gilead's remdesivir today. Those were the ones everyone was waiting for because they were the gold standard placebo-controlled trial, and they came a month early. What they showed was that the drug accelerated the recovery time for patients. This is not a cure, but the results showed that patients on remdesivir recovered from their illness in the hospital around 11 days as a median versus 15 days for placebo. It also showed a trend toward saving people's lives. 8% of those on remdesivir passed away versus 11% on placebo. However, that was not statistically significant. The New York Times is reporting that the FDA plans to potentially authorize this for emergency use as soon as today, guys. So this is not a cure, as Dr. Anthony Fauci said, but it is a building block, the first drug to work for this disease. Back over to you.
Meg, thanks very much for that. Mike Santoli, I mean, the obvious debate point here as it relates to the market is that this is not a vaccine. It doesn't necessarily drastically change people's economic behavior. It is potentially an aid when it comes to treating people that have the disease, and it doesn't really alter whether we're going to be going back to sports stadiums or movie theaters anytime soon.
Yeah, I mean, the market's not interested in the nuances necessarily, to be honest with you. I think for the purposes of right now, investors are kind of seizing on any incremental news that we can draw the reopening of the economy sooner than we thought a little while ago. So I totally agree with you, but for the purposes of the cover story, for what this market's up to right now, the Gilead news was fine. And I do think that you can't have this kind of rally that Josh was talking about too, without you having had extreme caution to set it up. And this rally has started to seem like a bit of a chase. There's been very grabby. There's been a gap higher for 5 or 6 straight days in the S&P 500. So it does seem as if there's a lot of positioning, maneuvering going on as people kind of assimilate this idea that, hey, maybe we weren't looking in the right places for exactly how we can look across this valley in the economy. Once again, this is a collective bet the market's making. It could be proven wrong. We're getting up to levels where it's going to have to prove a lot more. But I think that's what's been going on to this point.
I'm not sure I agree with you, Wilfred. I mean, I get it's not a vaccine, and therefore, you know, it won't create immunity, and it's definitely not a cure, but anything incremental to get consumers more confident from the place that they are right now, which we saw a record drop in consumer confidence, hearing about drugs that are out there that can actually improve your chances of staying outside the ICU or not coming close to death, I think are important psychologically, especially if we hear the backing from people like Dr. Anthony Fauci, who is all over the public sphere about going out and taking the first steps into a restaurant or into a retailer. And it's not just Gilead's remdesivir, which is for very serious patients. There are hundreds of other drugs that at least are being looked at. Anti-inflammatories, anti-arthritis, that sort of thing. At least it just helps incrementally improve, I think, the confidence in the absence of the vaccine, which is going to take a lot longer.
Of course, incremental, absolutely the key word, though, there for me. I mean, I think we're both sort of along the same lines. It depends how you put a spin on it, but a 12% possible death rate changing to 8% is not the drastic change that would alter behavior in a huge way. I think it's certainly marginally positive. But again, you come back to the point, Josh Brown, that the economy declined about 5% quarter on quarter in the first quarter of the year when we were only in lockdown for a couple of weeks. So again, we've still got an enormous amount of bad news for the economy to come through, even if behaviors can improve going forward.
It's going to get worse, and I think one of the key things, and this is a discussion we had with clients this week actually, we put out a letter to clients answering the number one question they were asking their financial advisors at our firm, which is, how the hell, is the stock market down 11, 12, 13% given what I'm seeing in my hometown, given the stories I'm hearing about people losing their businesses, their job? Like, how does any of this make any sense? And we gave a couple of answers to that, but the main one I would bring out is there really doesn't tend to be a linear connection in terms of depth with what the stock market and the economy go through. Is first and foremost. So in the 07-09 crisis, GDP contracted by 5%, but the S&P was cut in half, was down 57%. So by 2008 logic, does that mean we should be down 90% if we're seeing a quarterly GDP for Q2 about to fall 30 or 40%? No, it doesn't really work that way. That's one. And then lastly, I would just point out, we had these dramatic reactions in the stock market on the way down already. So I just think like people should think about this in totality, not one versus the other.
All right, up more than 500 on the Dow. Off session highs. Mike, what else are you seeing in the market internals today? It looks like a lot of the losers are coming up on top.
Yeah, that's been a trend, Sarah, definitely continuing today, although not nearly at the expense of those glamour stock winners. Yes, breadth is strong. You see about 80% of the volume to the upside. That's good, not stellar. Take a look at the equal weight in consumer discretionary this week against Amazon, which is by far the largest weight in that. So you see that the troops are really working here. The generals are taking a back seat. And then the volatility index receding once again. Still not what you'd call at normal levels, but it's cooperating to a degree down in the low 30s.
Mike, thanks for that. 30 seconds left of the session. We've come a little bit off the highs of the session. We're up 550 now on the Dow. The high of the session was up 660. Nonetheless, still a very healthy 2.3% gain. S&P 500 up 2.7%. Nasdaq 3.6%. And to Josh's point, the Russell up a healthy 4.9%. Energy, the best performing sector today, followed by communication services, up 5%. And 2 seconds in the red, staples and utilities as the bell.
The gray area is the after hour.
7% on the S&P
Oops,
500 for the
how
week
come
as a
it's
whole,
frozen?
3.6.
All right.
The 2000, the winner,
Let's
up nearly
see.
5% today and up over 10% for the week so
Facebook going down. Microsoft is holding. Tesla. Interesting. Tesla is going up. All right. Let's go.
On Wall Street, propelled by some good results from Gilead's remdesivir drug to fight the coronavirus, and also from Fed Chair Powell helping fuel the rally late in the afternoon, saying the Federal Reserve is in no hurry to withdraw any of the stimulus and remains there to provide.
Whoa, Mastercard. Big drop. Tesla, big drop. All right. Microsoft is still going up.
3% a few minutes ago, but it was broad, and as we mentioned, it included some of the stocks that have been hardest hit throughout the sell-off. Energy.
All right, the report is not even coming out yet. We already see the drop and up.
Continuing to rebound here. Materials, consumer discretionary, the only two groups that were down. Defensives like utilities and consumer staples. The Nasdaq.
Don't! It took me out. Sold. I don't want to sell that fast. Oh shoot! Sold. Premature sold. I should have said higher. But what can you do? Hey, I cannot be greedy. Oh, look at that! 179! I should have said at 179! Oh! My goodness! Should I buy? Let's see. Oh, that's Tesla. Let's see Microsoft. Let's see the chart. Oh, the chart is not good. It's overbought. No. I'm not bought. Oh my god. Oh, okay, dropped. Ooh, 180. All right. I sold. That's it. All right. Wait, where's my... Okay. Ooh, look at that. I knew it gonna hit the 181. Well, sometimes, you know, I like to be safe.
And then we were at almost exactly 1 calendar year ago as well. So we got back more than 60% at this point of the total losses. We're getting into May. It would make all the sense in the world to actually see this thing flatten out or pull back right now, but I've said that before during this rally, and it didn't give you much. So I would just put that out on the radar that today seemed as if almost kind of a capitulation, abundance of good news. Market does best when it can basically go from bad news to less bad news, and when the Fed seems to be giving more support than absolutely needed. I think both those things were top of mind today in the rally.
Josh, I know we've seen a great run for the likes of the Russell, the likes of the regional banks over the last couple of sessions, but is there still room,
Houston, we have a problem.
The overall pack does, room for there to be a
get out of
closing and
here
narrowing of
and
the gap
get in.
between the big tech outperformers and the banks and the small cap underperformers?
All right.
Well, there's
Get
always
out
room, and anything can happen. It's going to
and
be tough
get
because
in.
the fundamentals of large cap tech are just significantly better. And I don't understand a scenario where that would change on a dime. So what could change? Sentiment around what will look better a year from now. And so if a lot of money starts thinking, you know what, I get it, Google's doing great, Facebook's doing great, but what's next? You know, if that mentality takes over, then sure, you could certainly see that gap narrow more.
We're starting to get some earnings out. Qualcomm first. John Ford numbers. John.
Come on.
Hey, Sarah, just those numbers just out.
Come on.
The revenue
E-Trade,
has come
fast.
in at $5.2 billion versus $5.03 billion.
Qualcomm is shooting up
Qcom.
Qcom. All right.
Share at 88 cents versus 78 cents expected. So those numbers better than expected. Also, the guide is to $4.4 to $5.2 billion in revenue for fiscal Q3 and to between 60 and 80 cents in earnings per share for fiscal Q3. I want to note that MSM chip shipments, which is a measure of the overall health and volume, mainly of the smartphone business globally, that number came in at 129 million units. That is below the midpoint, the range that Qualcomm gave last quarter before we knew that this coronavirus crisis was. The range that they gave was 125 to 145 million units. Well, let me go through some of the detail on the quarter now. I did just get off the phone with Qualcomm CEO Steve Mollenkopf and CFO Akash Pakwala before the call. They had some very interesting detail here on the quarter. For one, they did manage to sign Oppo and Vivo, those two Chinese licensees, two 5G agreements, which is important. Mollenkopf told me that China is well on its way to recovery after it's dealing with coronavirus. And so that's part of the reason why long-term, he says, he sees no fundamental change in the desire globally for 5G.
I should have been
Qualcomm is
a little bit gutsy to set up here. Let's see Facebook. Ooh, Facebook has this blip down and up.
2020. I asked him if he expects to see a delay in 5G infrastructure rollout.
Tesla went down. For what reason? We haven't seen the report yet.
That there hasn't been a big change in intensity overall.
Facebook is moving.
More intense in building out. There has been some impact in Europe. He did say also that he expects to see some improvement in things as you exit June. That's part of what gave him the confidence to give the guidance that he did. And he said, and this
where's my level 3?
Looking forward to OEMs like Apple and others toward the end of the year. Will they release handsets? He said, by and large, people are trying to stick to their schedules. That's OEMs putting out new smartphones toward the end of the year. Especially the Chinese are sticking to their schedules, guys. So that's from Qualcomm CEO Steve Mollenkopf. Back to you.
John, great to have that, and the stock is up 5% after hours. Take a look at Microsoft. It's also soaring here after hours. It looks like a big beat. Let's get to those earnings with Josh Lifton. Josh.
So Sarah, Microsoft reporting Q3 earnings per share here of $1.40. That's versus expectations of $1.26, and revenue of $35 billion versus expectations of $33.7 billion. So it beats there on the bottom and the top. Just quickly turning to the segments here, revenue and productivity and business processes, $11.7 billion in the quarter. That's an increase of 15%. Within that, it looks like Office.
Facebook is shooting up a lot more than Microsoft. Facebook is not even reporting yet.
$3 billion. That's an increase of 27%. Its cloud service Azure saw revenue growth
182.5.
Microsoft going head-to-head with Amazon's AWS, and revenue in more personal computing.
It should be gutsy, more gutsy next time. I have my resistance line, but hey, look at this, it's coming down now. All right, done. Money made, and I'm happy about the result.
Let's get to Facebook's numbers. Revenues, a slight beat, 17.7.
Slight beat.
Forecast 17.4 billion. The EPS coming in at 171. The forecast was 175. You are seeing a slight uptick in engagement.
12.86% up.
So we've got daily active users 1.73 billion. The forecast 1.7 billion. That equates to an uptick of about 9.8%. 6.3% year over year.
So it went up 6.3%, 6.29% after hours, and then still moving.
About the same as what we saw last quarter, about 7.5%. In terms of the ad revenue, the number directly related to advertising, that's held up well. So you've got engagement up, but advertising revenue doing all right. 17.
Ad revenue is doing well. Wow, better than I thought.
That's up 17%.
Wow, that's nice.
Last quarter was up 25% year over year for ad spend, but
overboard.
to still be up
Don't buy it.
17% in this environment is not bad.
RSI
That's
is
all headcount up
overboard,
to
way
48,000. It was 45,000 at the end of the last quarter. So
why I have two momentum? I have no idea.
After a decent
I don't
move
have
already in
volume.
session today, so a pretty strong 24 hours Facebook stocks performance. Julia, you've got more on these numbers.
Yeah, I think it's really important here to look at the guidance. Facebook does not traditionally give any guidance in the earnings report, but they are talking here at this time, they're changing that. They're including a section here in this earnings report on the impact of COVID-19 on their outlook. They're saying we are facing a period of unprecedented uncertainty in our business outlook. They expect business performance will be impacted by issues beyond their control.
Facebook today starting at $190 after the report, after the beat is $208. 208 minus 190, 190, that's up 9.47% Facebook today. Should have buy some Facebook. I wasn't very bullish on Facebook. Facebook is very strange. Either big shooting up or big coming down. It's very hard to. Ooh, Qcom. After the beat, it went down. You see? You never know, eh? Look at up and down. Oh well. You know what? Maybe. Let's see.
There was all this anxiety going into this earnings season about advertising in a recession when customers would be pulling back, and now
all these
Snap,
people are
Google,
eager
and
to sell.
Facebook
I
all
see.
had better than expected numbers.
Profit taking, profit taking.
Yeah, so I think what we knew for sure was that engagement would be way up, because like literally what else are people doing? But what we didn't know is, one, would advertisers continue to spend at the same rate they were when things were going really well? And
wow, Qcom continuously coming down. Serious? Good thing I did not buy Qcom. Whoa, look at the Tesla. Look, $813, $820. Man.
Ad revenues were 33%.
Wow, that is so beautiful.
Touch on Microsoft really quickly.
Beautiful. 835. Woo! Go, 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 go.
This is a company that just told you it beat
Tesla, go.
Bottom line, and the business was unaffected by a.
It's not even reported yet. Tesla bull, come on, shoot up to 900.
So let's relax with the causation correlation
Tesla.
here.
Oops, why am I on Microsoft?
In the world, by the way, then Google is 6, Microsoft's 1. There is
right.
a reason. Look at the degree to which these companies are doing what they're doing in literally a global shutdown with a third of the population stuck inside their homes.
This is Tesla.
It's not an accident. It's not the.
This is our Tesla, favorite Tesla. Why not shoot? Let me see. I didn't know. Draw the resistance line. Gee, I drew the resistance line. It broke. All right, all-time high. Let's draw the all-time high.
Huge gains in the actual session. It's up over 10% now for the last 24
hours. It is, and then look, we have to be clear. There was some anxiety about the ad.
I know all-time high is 975, but we cannot draw 975. Somewhere here. All right. 950.
So all that makes sense.
Okay, 945 here. Proximate. That's all-time high. I don't think it's gonna hit all-time high, but it's exciting to watch. Whoa, it came down? No good.
Plus expenses going down, that's a different part of the story too.
I just want to get in here to
Come on, come on, come on, go up.
Go ahead, John.
Only one way, Tesla, please, going up. Let's shoot overboard. Come on, let's shoot.
Facebook is only up 2%. The XLK,
A66 is another line.
So I think that's right. There were already concerns about growth
All
rates
right,
for these
let's
companies
see.
dating
Let's
to
see
before the pandemic.
if we can go
And it's
to
not as though these
A60.
stocks have been leading the parade. They've both underperformed their space. So I think even though they beat
Let's see what else.
slightly lower
Oh,
guidance or
Facebook continued to go up, 211.
to
Wow,
justify the rally they've had
that's
in the last
nice.
few
Let's
weeks.
see if we
I was
have
actually just gonna
any
put in the
news
tech
come
numbers
out
when we get
about
back to
Facebook.
and Tesla coming in with a slight beat on
My
each
mouse
revenue,
is
6
very
billion,
sticky mouse
forecast is
today.
5.9
Facebook
billion. They've also
reports
already
inline
updated
beat
their
on
stronger than
revenue
expected
has
deliveries for the first quarter.
Okay.
Looking like that playing out.
Earnings
So
reports
I'll come
earnings
back a bit later,
1.71
in
per
terms of
share,
the
in line with
expectation for deliveries for
S&P's
Q2.
consensus.
The EPS
Exactly the
beat on
same.
bottom line,
All right,
$1.24
revenue
adjusted compared to an expectation for a slight
rose
of
17.6%
looks
to
pretty strong.
17.
Revenue slightly ahead, sir.
Okay,
All right, let's hit Facebook again, which is soaring here.
That's
after
a big
hours.
beat.
We'll get back to Tesla
All right.
after a while. This is a
That's
crazy
a big
earnings
beat.
section so far. Julie
All right.
Thurston back
Tesla,
now,
I mean,
along with a special guest,
Facebook
CFO
is a big
David
beat.
Weiner.
Tesla, we
Julie,
don't know
take it
yet.
away.
Tesla prematurely went to
Sarah, thanks so much. And Dave,
$845.
thanks so much for joining us right now on the heels of those earnings and before your earnings call. We appreciate it.
Qualcomm recover slightly. All right.
So, Dave, I want to really hone in on what you're seeing right
Oh,
now.
I lost my level 3
There
somewhere.
was a pretty steep decline.
Let's see
at
if
the
I
end of
can
March,
get it.
But then in April, things seem to be stabilizing. Give us a window into what's happening
level
with
3?
Facebook's advertising
Oops.
right now.
I know my level 3 somewhere hiding here. What's the name of it? Trading ladder. Okay, let's see. Trading ladder. It's called a trading ladder.
Revenue starting in about the first week of March, and that sort of continued. Now we've seen some more recent stabilization.
It's too big. That's
as
why.
part of the earnings release, we did include information about the first 3 weeks of advertising performance in Q2.
Trading ladder.
And that's about
Go into
flat year-over-year,
tools. Trading ladder. Anybody see trading ladder?
So to have a stabilization, though, does that indicate to you that things will start to turn around by the end of this quarter, into next quarter? What's your outlook going forward?
Well, I think the outlook here is really
Trade
uncertain, and that's
ticker?
why we're
No.
not providing
Ladder.
We're really
All
just
right.
getting the data that we
My eyes
have
not
through the
working
first
too
3
good.
weeks.
All right, so
We
let's
know
see
that,
if I
we
can
know that
recreate
economists
this.
are calling broadly
Oops.
for a GDP contraction in Q2 that's pretty substantial
Can I
globally.
shrink
We know that advertising
this
tends to be
thing?
very
Link
sensitive
one.
to the macroeconomic climate. So we're really,
Show closing
have a very cautious
price.
outlook on how things are going to develop.
Show high.
Now you have both
Show
small businesses
low.
on your platform and the biggest brands in the world. What
don't
trends are
wanna
you seeing,
see.
especially when it comes to small business? I know you've made
wanna
various
this
efforts to
part.
help
How
small
do I
businesses right now.
minimize
But
this
are you
part?
seeing them fall off a cliff or just stop advertising completely?
Haven't done this. Hide button panel. Yay! There you go.
Small businesses. So
Little
we know
rusty.
that this
Haven't
economy is hitting small
do this
businesses
for a
particularly
while.
hard, but we are
Oops.
seeing there are small businesses who are digital natives who are advertising on our platform, who are going
Still
after
has
sort
to
of
be
online
smaller.
conversion outcomes, whether it be app installs or e-commerce transactions. So we're seeing strength in those sorts of verticals, and
The
that's true for
trick
small
thing
businesses
is
as
don't
well
go
as
it
large
over
businesses.
the range. Otherwise, it will just go to the other page.
Take all these areas
Just
that
like
Facebook
I
is seeing
did
increased
earlier.
engagement.
All right.
whether it's more
So now I
video
can
calls
have
or
a
people
clearer
live
view
streaming on
of
Instagram.
Facebook.
Now, are you gonna be
But
able
right
to
now
introduce
it's
new ways to
overbought
monetize
already.
that?
Unless I bought it
Because a lot
here,
of these areas with the biggest spikes in engagement
it's not a
aren't
good
actually
entry
monetized
point
very much right now.
because MACD is coming
Julie, first of all, we're really
little bit slightly converged. I don't want to go down
that's really important for us, and we're
later.
seeing that with people engaging
So
with,
it's not a good entry point. It was good entry point somewhere along here when this line just crossed, the black line just crossed the red line around here. So this candle is the best time to get in, which was way before the report, so I did not get in. Right now it's too late. It's the best to get in before the market close, but who knows, right? You cannot have. I was bearish a little bit, so it cost me little dollar for not making money. Let's wait for Tesla anyways.
Certainly.
Okay.
I want to get your sense of expenses.
All right, Microsoft is done. Basically, it beat, but after the beating, I'm surprised the price of the Microsoft, the price of the share did not go up. These two candles are the biggest candle before the report coming out. The report coming out on this candle. So is Facebook. The report come out around this area. Around here, the report came out. So $6 more after the report. Not that much, but still, if you see from the 3 months chart, it's a big candle going up. So tomorrow morning could be we're starting the price a little bit here. So let's wait until they have the conference, post-earning conference, and see if it will have any more going up the price.
Facebook have been around privacy concerns and fake news, toxic content, and legislation, investigations. To what extent are you guys?
So it's still going up. Seems like people like this report. Let's see. Microsoft, what kind of report? Let's see if they have the report coming out. Tops, okay, cool. Earlier, I wrote it down, was revenue reached to 35. I wrote down was 33.70, so beats. All right, so
across Facebook, Instagram, Messenger, and WhatsApp. Second, we're helping the public health response. So we've
$1.40 per share. The consensus says $1.27 per share. It's a big beat. Let's see the.
We're also announced that we're putting $100 million of grants towards small
any
businesses,
guidance
as part of that, but more importantly, we're helping small businesses.
Well, anyways, guidance I can look at tomorrow, but at least it's a beating top line, bottom line. Facebook is in line with the earnings per share, but beating the revenue, and then the advertisement rose 12%. That is all good news for Facebook, for both Facebook and Microsoft. Tesla, let's wait for Tesla.
With some rivals of yours about security with some of those calls. How confident
Waiting for
about
Tesla.
The security,
Ooh, Tesla. Cup handle. Nice. Please, coming to buy Tesla. Please, please. Bye, bye, bye.
Yeah, we don't listen into calls and monitor things like that from a privacy perspective, Wilfred. So
beautiful
what
bull
we're
flag.
focused on doing here is expanding our free video calling options.
However,
that for a number of years on both Messenger and WhatsApp. So Messenger Rooms we're really excited about.
Overbought, momentum coming down, volume doesn't catching up.
And I think it's especially timely.
It's not a good time to get in, but I always say that when you see the price go up, you feel a little bit itching, but I still not gonna risk too much.
800 million people engaging.
Let's see Tesla.
Watching Facebook live streams.
Level 3.
We're really excited about
very
the different
active.
video offerings and the expansion of the of the video presence offerings that we have with things like Messenger Rooms.
See people setting the price to
David,
sell for 840,
economies and the path forward.
845.
One of the key features that we need, according to all the medical professionals
Big
and
Cell
leadership,
have
is contact tracing. How are you guys
850,
thinking about that at Facebook? With such a critical mass, so many Americans and
Those
people
are
around the
preset
world on
price. I'm
Facebook,
just
can you be a part of this, or do you worry about
take a look at people's plan. Look into people's brain. Suck out their brain.
with them, around them, know that they've
All right.
been exposed?
Looks like still we have buying more than the selling. Tesla usually give out report around 4:30-ish.
So the COVID Information Center is part of that.
Look at the Facebook. The more I don't want to buy, the more it go up. It just, well, anyways.
And, one question I have is, as you think about the work you're doing around COVID, but also around your own workforce. I mean, Facebook was one of the first companies to have its employees work from
Still
home.
beating
How
myself.
are you seeing this
Microsoft.
changing
I
the way
had
you
this line here. I
going
did not set up
forward? Do you
higher.
think
I still beating myself up.
Does it change?
Anyways, winner chicken dinner. Still, I won some money.
So much in?
Let's see, Tesla.
Well, we don't know the answer in the long run, but I will say that we've got 95% of our employees working from home in this environment. So we've got
This
a
is
small
level
amount of
2
staff
for
who's having to go into data centers and into the offices, and there obviously the focus is on safety. What we've been pleased with is our ability to continue to operate in this environment. We're able to ship products. We're able to stay in touch with our business customers.
Curious to see
CAPR. Review content. So
no news. No news and going up that much. For what reason?
It means we're going to be more cautious as we bring people back into the office as well. We're going to make sure that we have a paced approach to that, and obviously we want to make sure that the shared resources out there in terms of transportation infrastructure are for those essential workers who need to get to their jobs. If we're able to do our work from home, we'll probably be slower to roll back in.
Shares climb after treatment success
$5.7 billion
6 hours ago. Too late. Let's see what kind of treatment.
Tell us about how this investment reflects your interest in emerging markets and where you see future revenue growth coming from.
That cardiac cell therapy it has shown promise in treating patients with COVID-19.
So, India is right at the center of the long-term opportunities for Facebook.
Cardiac cell therapy. All right. So people won't die from
with Geo platforms, with Reliance. Geo's been an incredible
heart attack after contract COVID-19. All right.
It's great to be partnered with them. We think there's a lot we can do with.
There's a big jump. Always have some reasons. I like to read the reasons. Let's see their chart.
Even in this tough economic
it came
down.
Because of the strong
balance sheet we have.
Okay.
So we're really pleased to be able to move forward with it.
It's a big blip. Earnings day for this is May 11th. Let's see the all-time charts for this one. Ooh, doesn't look too good.
Up about 9% after hours, adding to the 6% gain today. So extraordinary.
October 2002 came out.
Set of earnings results or a deeper dive into them. Tesla's numbers.
Oh, Tesla number, come out.
Hey, Wilf, the reason the stock's moving a little bit higher here is obviously coming in with a profit when many people were expecting a loss. Profit of $1.24 a share. The estimate on the street was for a loss of 36 cents a share. As always with Tesla estimates, they're all over the street. Let's run down some of the key metrics that came out in the report. Remember, they always report their quarterly deliveries in advance, and it came in as expected. Remember, we knew this was going to be the case. Just under 89,000 vehicles delivered in the first quarter. No change in the production guidance from Tesla, which is a bit of a relief. I think some people thought perhaps they might dial back their expectations a bit, but that is not the case. In terms of their cash on hand, they increased it by $1.8 billion. Remember, they had a capital raise during the quarter. Now have $8.1 billion in terms of cash on hand. Automotive margins, 25.5%. Then you've got the near-term profit guidance being put on hold. Now, some people will look at this and say, makes sense given everything going on with coronavirus. I'm not sure it's going to have a whole lot of impact on Tesla. Remember that truck that was expected first deliveries this year? That's going to be pushed out until 2021. So again, that's why you've got Tesla shares moving higher.
Sold.
It's the earnings call.
Nice.
Really
858.
Starting at the top of the, not at the top of the hour, 6:30 Eastern.
30 shares. Awesome. Ooh, 860.
What news, if any, comes out of that?
Oh, look at Microsoft. They went up again. Look at that. W sign, double bottom. Perfect double bottom again.
Earnings per share also beating by 5 cents, coming in at 77.
Oh, good. Tesla, Facebook, Microsoft. So as Qualcomm. eBay. Let's see eBay.
Coming in nearly $1 billion higher at 21.3
eBay is no good.
Keep in mind, though, that this number shrunk in 2019, and it's expected to decline again this year. Looking at the forecast, better than expected for both Q2 and the full year guidance.
Ooh, it had a blip. It had a blip. It went down.
Share repurchase plan will be completed later this year. The cash dividend is also intact.
On COVID, some pretty generic comments from management saying that their strong balance sheet and stable cash flow gives them strength and flexibility in a tough economic environment. Shares that were initially down by nearly 4%, they're now down by less than 1%. And
wow, Tesla still go up.
This quarter didn't really tell us anything.
Are you kidding me?
We know that it's been under pressure from activist investors. We know that it's trying to shed more assets. The stock price hasn't really done much, especially compared to other names in the e-commerce space like Amazon and Shopify. And this quarter looks to be more of the same.
Nice.
So shares up about 8%
That's
year to date.
so beautiful.
They're not really reacting much. They're down
This
a little
is
bit lower
okay.
in the
Let's see,
after hours,
Tesla.
despite beating on both the top and bottom line. Back to you.
Deirdre Brewster, thanks so much for that. Our thanks also to Josh Brown for joining us
Awesome.
today. A lot of big after-hours earnings movers.
Tesla.
eBay slightly lower, but Tesla, Microsoft, Facebook, all markedly higher.
Nice.
More analysis of
See, next time I should be very trust my resistance line, that the line that I just drew before. See, every time I draw a line, it beats a little bit, but my price is always set behind the line, below the line a little. Am I too bearish? I should have drawn a big bear here. I'm a big bear. My goodness. I'm a big bear. Okay, next target is 945. I don't think it will shoot up today. Let's see tomorrow. I'm a big bear, big little teddy bear.
This is Business Interrupted on E1.
Anyways, I had a too good sale today. Anyways. Alright, still.
BAM insured municipal bonds deliver default protection, value preservation, and a durable AA rating from S&P.
Okay, Microsoft turn around a little. So is Tesla turn around a little. I don't have a.
Economic disruption, like the one we're experiencing right
See,
now.
I don't have a cross line. I do have a cross here. I just needed to activate it.
The latest developments.
An update now on
All
the
right.
pandemic.
See, all the way went 865. My goodness.
Watch and listen live on the CNBC app.
865. Huh. All right, you see this one? It's a bearish doji. That means the trend will turn around. So it will go more red now.
From Long Island. From Connecticut. From Brooklyn.
New Jersey. Lubbock, Texas.
Hola.
Bonjour. Hello.
From all over the tri-state.
And beyond.
Oof, that is a good run.
We are here. We are ready. To keep you connected.
To keep you informed.
To keep you together.
During this unprecedented time.
And we won't stop.
That is what we do.
And we truly believe with all our hearts.
We will get through this.
Because we are all.
Alright.
In this together.
Shoo. What else? We had a Qualcomm. We had a eBay, Facebook, Microsoft, Tesla. That's the most important ones.
For implants, and in as little as 4 hours, the patient is leaving with a brand new set of 3D printed teeth.
I can smile, can eat whatever.
See how much green today we have on the watch list. It's a beautiful day. Alright, I think I will just end the video right here. I hope everyone enjoyed it. It's always fun to watch when the market is in action. And today is a good day to show that action. If you like today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.